Hi, this is Scott Murray, and welcome to the Daily Economic Market Shout for May 10th, Wednesday, 2023. Great being with you today. CPI came in as expected, zero point 0.4. Uh, and I think that is really not the story. The story was underneath. We saw service inflation moderating. Service inflation will take out rents because that's a housing component that may not be quite aligned with the market right now at zero point 0.1. So this is the second print that we've seen in that, and it's starting to take hold that service part of the economy is not putting through the price inflation, putting the price change in through, and that's actually really good news. Remember, that's part of the economy. It's pretty sensitive to higher costs because they don't have the productivity gains that they can create. So when we look at that, we get a little bit better sense. In addition, rents. We actually like to look at the owner occupied number. That's the major component there. Again, kind of a weird calculation of us renting our own houses from ourselves, I should say. And of course, I would be a terrible landlord because I charge myself too much and I would not make any repairs. So with that caveat, 0.5 is significantly better. It's a monthly number. We saw it move up to 0.7. Historically, this is a very high reading. We've over time had generally seen it between 0 to 0.3, maybe 0.4 at its most. So clearly a little bit improvement. We've actually seen that in real estate. We've seen, particularly on the rent side of the equation, apartment rents, we've seen prices coming down pretty significantly. And I think that's actually really helped the consumer out there, particularly the more vulnerable parts of our population, given the inflation wave that we've seen moving forward. Goods numbers were kind of squirrely. We saw used cars go up. We saw new cars go down. Actually, we saw used cars go up a fair amount. It's kind of odd to see that, particularly with the new cars and the supply of new cars building. I think these are just realignments of price levels. We've seen new car prices, and I should even say used car prices go up significantly. So they're really kind of settling into an area. Remember, transportation is a key component of people getting jobs. They usually have to find their way to jobs, maybe less these days, but still an important element. So cars have a tendency to be more sensitive to making their car payment than making their house payment when they are stressed. And so we see this as something that's important for the economy, important for demand. So as we keep seeing the job market doing pretty well, we move that forward. Net, you sort of see, regionally, we see the South doing really gangbusters, saw strong growth in prices there, and the East, just Northeast, not really doing much at all. Why is that? Again, it goes back to what I just talked about, which was employment. In Georgia, you see 200,000 job gains. It's pretty significant amount of people working. And so I think that's something we have to keep our eyes on. That's going to be a lot of pressure into the economy as these certain regions move up and down. But when one region is doing really strongly, that's going to put some pressure on the inflation rate for that area. Other parts of the country, not so much. So yes, there are some cracks forming in inflation. And because of that, I think that we should keep our eyes open as we move forward in terms of how the economy may slow down. With that being said, that would actually encourage even better inflation numbers ahead. So got to be a little careful what you wish for, but I do think we are kind of slowing down. And I think that's good because of the restrictive monetary policy. But that would, again, emphasize that we should see lower prints, and we should actually see that as sort of a good sign for businesses, meaning that they don't have to push through the price increases that they might have had before. Still thinking that we will see a kind of a slowdown, but thinking that it'll be kind of a soft landing variety as we move forward. So top line, right on, but the details tell the story of a encouraging sign for the U.S. consumer. This is Scott Murray for the Daily Economic Market Shout. Thank you for joining me.